like to call it personal protection rather than insurance when we're discussing it with clients. And the reason is you worked so hard to get ahead in life, whether it be extra super contributions, investments, whether it be shares or property, working 10-hour days. All of that can unravel really quickly if you don't have insurance to back it up, if you lose an income for a year or two. So there's 4 main types, and I guess the most common one, which everyone sort of bundles all the insurances into this category, but it's life insurance. And life insurance is very, very self-explanatory. You will get a lump sum payout if you were to pass away, and it's very black and white as to whether or not you get paid out for obvious reasons. So people will generally get an amount of life insurance to make sure that the people they leave behind, or the dependents or the loved ones they leave behind, aren't going to have any problems. So if you have a husband and wife, and the wife passes away and she was an income earner, she might want to leave enough money for the husband to clear the mortgage and pay for the kids' education costs. So there's 2 really big expenses that they would have had to deal with in their life, now gone. All the husband has to do is work and put food on the table. So things like that, people will leave from a life insurance point of view. The next one is TPD, or total permanent disability. Probably less chance of getting paid out on this than life insurance, because life insurance is black and white, but TPD means you need to demonstrate that you do not have the ability to earn an income ever again. So you've had an accident or an illness that's so bad you've lost your ability to work. Personally, it's just as important as life insurance, if not more important, because you're still here. So you're still here. You still have expenses. You haven't passed away. So, which is obviously a good thing from an emotional point of view, but financially, it's a bigger burden on the family if you've lost the ability to work but are still here. So, again, people will look to get rid of the big expenses: mortgage, education costs, perhaps provide some top-up income depending on whether or not they've got income protection, and or whether or not they can go back to a smaller to a lesser amount. So they're the 2 that most people will have that come into our business. They're not as expensive as the next 2. The next one is trauma insurance, which we spoke about earlier, and that again is a lump sum payment, and that will give you a payment if you have a traumatic accident or injury. So we spoke earlier about losing a leg, cancer, heart attack, and stroke. 3 of the most common trauma payouts we see. So again, that can be just to get you through that rough period, whether it's 2 years through an illness, whether it's 3 to 4 years through an illness, depending on how bad it is. And the last one, and the one that I think is most important, is income protection. So income protection will pay you a monthly benefit whilst you don't have the ability to go back to work due to illness or injury. And most policies will pay you until you're 65 years old. So 75% of your salary is the norm. You have a waiting period on that policy. That waiting period will determine the premium. And then if you're off work for 2 years, once you've sat your waiting period out, you'll get 75% of your income, up to 75% of your income, I should say, on a monthly basis whilst you're off work. If you demonstrate that you're total permanently disabled and you can't go back to work, you'll get it till you're 65 years old if the premium is a 65 year to age 65 benefit.